We are going to move from a resilience to a natural brilliant state.
We're all here to move our Black communities forward.
We think our children have to have the best. It's all about discipline.
How are we going to discipline ourselves so that we're able to save, so that we're able to make good financial decisions?
Recognizing that there's a road ahead if you manage the road in front of you.
The decisions that you're going to be making today in your lives where it comes to money will affect you in the future.
Discipline is one of the things that we often learn, sometimes by our environment, or sometimes we're forced to do it, and sometimes we don't learn it at all.
Stores want to get us in and out and get our money, and that's it. It's a game, so you have to be really wise to the game.
Do you know what it costs to run your home on a monthly basis?
As we gather together here as family and friends, we acknowledge this sacred land on which we reside. It has been the site of human activity for 15,000 years. This land is the territory of the Huron-Wendat and Petun First Nations, the Seneca, and most recently, the Mississaugas of the Credit River. The territory was the subject of the Dish with One Spoon Wampum Belt Covenant, an agreement between the Iroquois Confederacy and Confederacy of the Ojibwe and allied nations to peaceably share and care for the resources around the Great Lakes. Today, this place is still the home of many indigenous peoples from across Turtle Island, and we are grateful to have the opportunity to work in the community on this territory. We are also mindful of the broken covenants and the need to strive to make right with our relations. We also acknowledge people of African descent who were brought here against their will or in search of a safe place to live their lives and raise their children. Thank you.
This webinar provides illustrative information with respect to the subject matter covered and does not represent an official opinion or position of the Black Business and Professional Association. The BBPA makes no representations, warranties, or guarantees as to assume no responsibility for the content or application of the material contained herein, and especially disclaim all liability for any damages arising out of the use or reference to or lines on such material.
And it's a beautiful Saturday morning. Good morning, everybody. Hoping all is well with you and yours. It is Community Space, another week of the financial literacy program that speaks the language of the community. It's a beautiful Saturday morning. Tika, how are you?
I'm well, Roderick. And it is the last Saturday of May. How quickly the months fly by. I can't believe we're almost in June.
Absolutely.
We had some rains, so looking forward to the sunshine returning and the warmth of
for all of us in Southern Ontario, what a difference a day makes. Yesterday, we were down to 4 degrees Celsius. And prior to that, a couple of days before, we were at like almost 34 degrees. So
it was hot.
it was extremely hot. And, the AC and everything else was on. But yesterday, the heat had to come on. So hopefully we're going to be returning back to the somewhat tropical weather. Michael Pinnock, how are you this morning? Michael Pinnock, how are you?
Sorry. Oh my God. I'm so comfortable. I know I'm excellent. It's always good to be here to listen to you younger folks go through, to listen to the doctor talk about all the things that will improve our lives as we listen and go forward. So no, I'm excellent, thanks. And I just work with the weather,
Absolutely. That's all we can do.
Yes.
And as we often say, it's not too late to tell a friend to join us here on Community Space. Just don't keep it to yourselves, keep it to our community, keep it to everybody who could benefit definitely from the knowledge and the information and the insight that we have here.
There's a new saying, Roderick, make it a pandemic, spread it around widely.
Absolutely.
Well, that's one way to go.
Yeah.
That's one way to go. No, but we have Professor Irene Enriquez of the Schulich School of Business at York with us for the third session of 4 sessions. And this week we are talking about the economics of the financial market and the power of organized interests. And as alluded to last week, the BBPA fits very nicely under that umbrella of an organized interest. So I'm certainly looking forward to today's lesson, and I'm sure the very fruitful discussion that will follow. Just a couple of house rules before we get started. Please note that this session is being recorded, so for privacy concerns, you may choose to turn your camera off during the session, but when we are doing the Q&A, if you do raise your hand, we do ask you to turn your cameras on then. We are monitoring the chat. Feel free to post comments or questions in the chat, and of course, raise your virtual hand during the Q&A. Have I missed anything here, Roderick?
No, I think we're pretty on point here. And before we get to Professor Enriquez, I recently, actually yesterday, just got an email from Schulich Business of excellence in terms of they're having an academy for Black and Indigenous youth in high school. For anybody who's interested in that, and it looks like it's going to be an amazing time throughout the month of July, please do, I will share that in the chat. And if you have anybody in high school who's interested in business and is interested in going in terms of further education to university, please do pursue that link. There's a lot of opportunities for the community right now, so take advantage, take advantage.
Yes.
It's also run by our students, BBA students. So this is by them, for them. It's amazing.
Absolutely.
Oh, fantastic, fantastic. Right. And I'll make one last mention before we get into today's session. There is a textbook that is sort of an accompaniment to this cohort. We'll post it in the chat, but you may have received an email. You can go ahead and purchase the Kindle edition of that book. I think it's about $14, and the BBPA will reimburse you $25. So we're also incentivizing you in a way to purchase the textbook. We will post that in the chat and continue to do so throughout today's session, but just wanted to flag that note about the notebook. So Professor Enriquez, thank you again. Over to you.
Thank you very much. Now let me share my screen.
How are you this morning while you're getting ready, Professor Enriquez?
I'm fine. Can you allow me to share my screen? Thank you. All right. I'm good. The host disabled screen sharing, so I'll have to wait. Thank you. I am good. I'm just recovering from the weather. Insofar as it scared me yesterday when it snowed up here. Right? Yes, we saw it. So I'm just going, oh no. So today, what are we doing today? Well, today we're going to do financial markets and power of special interests. And in the case of financial markets, I'll tell you what a financial market is and how it works and sort of the economics behind it. But before we do that, Roger gave me some homework. Oh, that's terrible. But I like homework, right? It's always a challenge. So the agenda for today is as follows. First, I'm going to answer to last week's homework, which is education a business, right? And what is the value of an education? Because you may hear this, it costs too much money. But for me, I want to show you with data what the value of education is, and also where the greatest value is, at least now. And this could change across time. Is that clear? The world is not static. Things change. When people move too much into one area, you have an oversupply, then wages fall, right? And then other areas where you don't see too many people, like a plumber, okay, all of a sudden their wages start going up. So keep in mind that everyone going to the same field is not good either, right? And so far there has to be a balance. So let's continue with that. And then I'm going to talk about financial markets. What are they? So as soon as you make your money, let's see where to invest your money. And then we're going to talk about the special power, the power of special interests and how to increase it in a digital world because there's so much information going out there. So how do you get heard? And so week 2 homework. First question is education a business? And I just want to say that Canadian universities are set up as charities as act of parliament. So Canadian universities are charities. And so that means that they're not-for-profit organizations. So that's why when you donate to a university, they give you a tax sort of saying, so you can take the money out from your taxes as tax incentive. And the other thing is, so most Canadian universities are not-for-profit organizations. And so they could make profits, but that is to pay for, in fact, their teachers, their professors, their buildings, the electricity, the water, all those bills. Believe it or not, the fees that students pay is not sufficient. So the government also has to put in money as well to allow the universities to continue. They also have to invest. They have to invest in new technologies to keep up with what's going on. Labs, so scholars, researchers apply for money from the government, whether NSERC or SHRC, there's the two organizations that we have here, to actually get money for labs, for research assistants, et cetera. So it is a big enterprise, but it is a not-for-profit business. That's one. The next one is, what is the value of an education? In this case, I want to look at first, how valuable do you think it is? And how valuable will you think it is based on voting with your feet. Are people going there? Are people applying? What's happened across time? So what I'm going to look at is the participation rates in college university studies for the 18 to 24-year-olds in Canada, across Canada, to see what's happened. So let's take a look at this. Are you ready? All right. See, I got this all organized. Isn't that beautiful? It just comes up. There you go. So C is college, U is university. What you have here, this is from StatsCan. And as I said, if anybody wants my overheads, you can email me at ihenriquez at schulich.yorku.ca. I'll put it in there and I will send these to you if you'd like.
Take your shoes from under the table, put away.
Sorry, folks, just a reminder to please ensure you're on mute.
So no, that's so typical. I love it. So what we have here is the participation rates in BC went up 43% from 2000, 2001 till 2018. 43% increase, 43% participation, excuse me, and 27% increase from that period. So 43% of 18 to 24-year-olds are in university, all right? And that's a 27% increase. In Ontario, it's 47% increase. 47% and a 34% increase. So you could see that across time, more and more people are actually, the participation rate in Quebec is 50%. I'm going to explain why in a minute. Their fees, tuition, is much lower than the rest of Canada, okay? Much lower. Mind you, they pay higher taxes. Is that clear? You can't have one without the other. And they're okay with that. All right, so there you go. So the rise in participation in higher education among Canada's 18 to 24-year-olds between 2000 and 2018, 2019 was due mainly to a 50% increase in the popularity of university studies. So clearly they view that it's important. So if you look across Canada for universities, BC, 84%, 69%, 58%, all right? So that's one of the things. Colleges went down. Now, it did not go down in Quebec. Let me tell you a little bit about how different is Quebec. I am from Quebec. So I went through the Quebec education system. What you do is you go up to grade 11. For at grade 11, then you have to decide to go to college or not. They call it what you call CEGEP. You do not go directly to university. Is that clear? So they have 2 years of CEGEP. In CEGEP, you can decide to take university level classes to prepare you for university. So you get out of high school, you get in those 2 years. Or you can do other programs, daycare, other nursing, helping, whatever other initiatives, other things to see. So what you do in CEGEP is decide what you want to do. They give you that extra time to think about it because you're 17 years old in most cases, or 18. You may not know. So the CEGEP system is that feeder that helps you decide, do I go to university or do I do sort of a college degree instead? And so that's what happens in that system. And so as a result, you see people, they do go to CEGEP and some of them stay there and then do other programs. And this is the way that Quebec has figured out how best to match people to the things they prefer to do, okay? And so that's one thing here. And I'm gonna stop that. So that's the participation state. So voting with their feet, people have said, yes, university, I think it's something I want to do. Now, the next question is, does a college or university education lead to a higher salary? Roger, does it do that? Well, let's look at the data. Oh my goodness. I love numbers. Okay, so what this is the median annual earnings of men between 25 and 64, okay, who worked full-time and full year as a paid employees by the highest level of education. So the triangle, blue triangle, is a bachelor's degree. The yellow triangle or rectangle, whatever that is a college diploma. The red is the apprenticeship certificate, and the green is a high school diploma. This is median, meaning it's not the average, it's where most people are with this, okay? Is that clear? Now, with only high school diploma, who's the highest of overall? Chat, please. Who's the highest? Men overall, who has the highest salary? Do I see the chat? Let me get my chat. Oh, yes. Oh, you are. This is wonderful. Anybody? Come on. I need my people. Let's go.
There we go.
Thank you. All right. Alberta is the highest, right? And this could be 2016 where the oil price is really high. At that time, you have to keep in mind. This is from the census. Is that clear? So this is census data. And so is the highest. But what about the field? When I'm talking about high school diploma, apprenticeship, college diploma, bachelor's, who has the highest salary in general? Which group? Not the province. Which one? Thank you. So in general, according to this data, for men, having a bachelor's degree yields a higher salary. Now, women. Some people are going to say, oh my goodness, that diagram went down. Well, it's also the type of jobs. Is that clear? Right. So, and we know that women have lower salary. No one likes that. We'll try to change that. And these are the things. So, for example, there are fields that have there for daycare providers, for example, are mostly women, and they usually have a lower salary than nurses. Is the same thing, but that's changing big time. Okay. They're finding that out. I'm going to show you some data that nurses now, especially if you get a master's, you can make a lot of money. And so these are the ideas here where you're looking at and also for women, you make more money when you have a bachelor's degree. Okay. And then of course, college diploma here. And for some reason, the apprenticeship certificates are lower than actually high school. Now, why is that? Well, maybe it could be for certain certificates and for apprenticeships. Maybe for work for daycares and all that. And what people working in daycare have always complained that they're not as well paid. Quebec has changed that, for example, and now there's more and more pressure. If we value our children, the knowledge that these women should be better paid. So think about that now they're doing college work, they're doing that, and also university as well. Any questions? Now I talk about revenues, but this is across time, right? So that's good to know. What about costs of education? Which province has the lowest cost of education? This is tuition and ancillary fees. What province? This is a geography test. Newfoundland, 7,000. No, the cost is right here. So take a look. So the cost right here. Yes, 3,700. Newfoundland. Oh, it's Labrador, right? All right, Newfoundland and Labrador. There you go. So should we all move to Labrador? So that's the question, right? It's not only where it's cheapest, but also the quality of education. It means you have to leave. But Quebec also. But you know that if you go from one province to another, you don't pay that fee. So that fee is for those people who are in that province. Is that clear? Just so. Is that because of the cost of living in that province? No, it's actually, they also subsidize the universities a bit more. And the ancillary fees, but even if the cost of living, for example, in British Columbia is a lot higher, especially for housing. So this is not the case there. So they actually said they want to encourage people to stay in Newfoundland, excuse me, and that's one of the reasons they do that. So they don't get the brain drain. And that's really a concern for some of these provinces. On the East Coast. Okay. Quebec, of course, they have just 4 universities in one city in Montreal. They have Concordia, McGill, Université de Montréal, and UQAM. And so they have 4 within. So, And education for there, at least in I think this was 2018, is 3,851. Unbelievable, right? For those people living. Now, and here on average, ours is 9,813, and that includes the engineering, et cetera. So that's why it's averaged. And then Manitoba's less, and we go through there. Okay. So that's the idea. And this has gone up by 32%. From 20, and so that's something that's, people are concerned with. It's gone up by more than the inflation rate. And so that's why scholarships matter, all right? So I know there's scholarships coming for BBPA. Please apply for them, okay? That will help you, that'll ease the pressure on your folks. And also then it will help you and increase your investment as well, all right? Now the next question. Yes, Charmaine.
Hi, thank you so much for sharing that info. Just before we get to the next question, I wanted to say, this is something that I would probably encourage if I had children. I would probably encourage them or, nieces or nephews or whomever to sort of review the data before sort of deciding on a college or university program if one is accessible to them. To first review the data and see, which job markets are yielding the most profit, which job areas are yielding the most profit, which degrees are yielding the most profit, and sort of to align it with their interests and see, if they're investing so much in university or college or an apprenticeship, wherever that student feels he, she, or they best fit in, wanting to make sure that at the end of the day, they're going to be taking home their investment is going to be worthwhile, because often a lot of students pursue certain areas that may not be as profitable because there's just an influx of people in those particular degrees or those areas or whatever the case is. So I think it is really helpful to look at the data and try to make proper assessments from there. It is, of course, also important to note that the data is an approximation. We don't know in terms of the class or the race or whatever the case is. Yeah. Sometimes those factors are not taken in, and you've got, it's almost like everyone is sort of grouped together, and sometimes it is helpful to sort of group data into race, because groups of individuals experience unique factors that need to be factored in. So nevertheless, it does provide an interesting approximation. But with regards to Roderick's question, last week, I did want to say that there was that really debate whether or not we should sort of focus entirely on business and sort of neglect maybe not emphasize education as much. And I think this data really clearly shows how it may be a bit of a mistake, especially if it's accessible to you. Everyone has a different situation. For some people, higher education may not be a possibility for whatever reason. But if it is accessible to you, I personally would advise individuals to at least pursue a college level or bachelor's degree. And the reason why I would suggest that is if you focus entirely on business, what it is you're neglecting a variety of professions. So you're neglecting, for example, nursing, you're neglecting law, you're neglecting social work, you're neglecting medicine, you're neglecting engineering. There's a variety of opportunities that may not be accessible to someone if they're focusing entirely on business. And then even if you were to focus on business, there are many markets that you may not be able to tap into because they require knowledge, a post-secondary degree knowledge. So for example, I may not, if I wanted to open up my own business and I were someone who focused entirely on opening up my own business and I didn't have the background education, I may not be able to sell medical supplies. So even the area of my business is somewhat narrowed down. Now I'm speaking from someone with 2 masters, and I definitely have a love of education, but at the same time, I think I think just looking at the data and also just looking at how things fit in. And, if we even look at sort of like the Black experience and we compare it with our white counterparts, I think we would be much more I think we would be much more at a disadvantage if we were not to pursue some level of education. And it's not, we cannot just say, okay, you know, our white counterparts are making it as CEOs with just high school diplomas, and therefore we should just focus on high school alone, because at the end of the day, it really doesn't work out that way. If you've got two individuals with, you know, it doesn't work out that way. I think at the end of the day, it will benefit individuals, especially Black youth, to get some degree of higher education under their belt. It would make them more, I think, appealing for the position. And I think that's just how how unfortunately it is right now, where you may not be able to reach the same level with having a lower educational background. So those were a few points that I wanted to make.
Yeah, thank you, Charmaine. And just keep in mind that this data, you're right, by race, usually what happens is sometimes people are reluctant to divide things by race because they don't know how to explain it. In Canada, sometimes we weren't collecting that information as much. Now they're starting to do that because they need to understand where the holes are. Yes. Yes, go ahead.
Sorry, I wanted to make an intervention, but I also don't want to
Go ahead, please. No, go right ahead.
So I just wanted to say StatsCan does collect race-based data in terms of like post-secondary education.
Yes.
And just based on the 2016 data that you're referring to here for the past few slides, note that Black Canadians have higher rates of post-secondary attainment in comparison to both white Canadians and other racialized Canadians. And interestingly, Black Canadians born in Canada are least educated in terms of post-secondary attainment in comparison to Black Canadians who migrated to Canada. And there's some other, you know, like school board data that shows that the longer a Black person has lived in Canada, so we're talking third generation Blacks, are actually less educated in terms of their educational attainment in comparison to Blacks who migrated to Canada or first generation Blacks. And there's a whole lot of conversation that can be.
There is going, absolutely. And Miles Cohort has talked about it, that it's the poverty line that continues, and the accessibility to education is the huge problem there. And you know, I came from a poor family as well, right? And my parents would say to me, why are you going to university, right? I mean, because it's 10 years to get a PhD, right? So what's wrong with you? It was one of my conversations. It was really funny, but they didn't understand, right? So the question is that it requires also the individual to have that need, that push as well. And I think it's really important that you're absolutely right, and across time that can happen depending on the accessibility. And that's why I showed you this graph to show you the difference in Quebec and other places, and even in Newfoundland.
And also, Professor Henrique, what I should also note, you know, I think that is a really excellent point. And, you know, oftentimes when it comes to young people or people with disabilities or students or, you know, or women or whatever the case is, there is such a thing where these individuals are having to hold down multiple jobs. And, you know, it is a really unfortunate situation, but it is the reality. And so I can even say in my own personal experience, I have had to work sometimes 3-4 jobs in just 1 year in order to navigate what it is that I had to navigate, while also ensuring that I kept up my GPA. And so but, you know, when I reflect on that, I don't think I would have been able to get the types of jobs that I needed to get in order to go where I needed to go if I didn't have the educational background that I needed. And so I think that's something, you know, it's really important, because, you know, if I had only a high school job, I may not be able to work in research or administration or student affairs or whatever. I may only have been able to have what's available to me as working at in a profession that working in a job that it does not match up with my educational qualifications. So it's so important, I think, to sort of invest in education, you know, as much as you can, I understand it's not accessible to everyone, and we have to understand that respectfully. But if you can, if it is accessible, invest in it. And I would also say, if you are interested in investing in business as well, it's something you can do on a part-time basis. Don't necessarily say, I'm going to fully work on my business. I'm not going to pursue education and put all of your sort of eggs in one basket. You know, a lot of times I hear people saying, I want to make it into Hollywood. So they, you know, it's a family, and maybe it could be one or two of the parents saying, I really want to make it into Hollywood. And what they do is they leave their job and they focus all of their attention in trying to make it into Hollywood. But on the other end, you know, when they're not able to support their family properly because they've got tunnel vision where they're focusing everything in one thing. Yes. So I think what we need to do.
Charlene, I'm so sorry to interrupt. If you don't mind holding your thoughts just to the end, I'm making note that it's now 10:31.
Yeah, one quick thing. So I think what we need to do is just make sure that we have a certain degree of balance, and that's what's going to help us as a community and as individuals.
Yes. Great, thank you.
You're welcome.
Well, I'm glad this is creating lots of discussion. I think this is really important. So let me sort of go to the last thing on what jobs. Someone says, what kind of jobs can we get? So let me look at one more infographic and then I'll move on to financial markets. And so what's really interesting about this is it's looking at post-secondary students 5 years after they graduate. Okay, so this is not divided by race. This would be interesting to see how this would be by race, but in general, post-secondary at 5 years, the fields that give you for the college diploma, all right, and with most money is engineering technology, followed by mechanics and repair, and physical chemical science. On the undergraduate degree, engineering technology again, engineering and nursing, okay? Now, on a master's degree, it's nursing, law, and business and related. Right? So to get an MBA. Now an MBA costs money, right? So you have to look at what the benefits are, but also you're getting also the after 5 years, your starting salary is higher. So in this case here, this is also looking at the median. Median again is the most people at it. When they first started, 2 years after they graduated and 5 years after they graduated. So clearly a college certificate, the difference isn't that much. College diploma is a bit. Undergraduate degree went from 46 to 50, so a $10,000 increase in salary across time. So whatever that skill set you built up, better communication, ability to write, everything, all that skills that you built allowed you across time to build that wage. So it's not only the education, but the experience throughout that job as well. The same thing, look at professional degree. That degree includes things like, in this case, it says the professional degree is law, medicine, dentistry, veterinary medicine, optometry, and pharmacy. So those are the professional degrees. The master's level, again, also after 5 years, increased substantially, and a doctoral degree after, look at that. So it does. Now, the question is, so this gives you an idea of what's happened and whether it pays off, at least in revenues, on the revenue side. Then you have to look at what the cost side is. And hopefully with the scholarship that gets better. All right. Now that you've made money, let's see where you're going to put your money. All right. So insofar as that's concerned, and so why does a doctoral degree give less pay when a master's degree? It all depends what it is. It takes a long time and depends on the type of job you get. Some people go into academia, depending on the fields. And the others go into it. So the starting salaries are different, but across time it gets higher. So the financial system here includes funds from savers to borrowers, okay? So the idea of a financial system is it allows you to give, so people save money and then there's others who borrow money. And there's always people who are saving at some point in their time and there's others who want to borrow. Depending on the life cycle, maybe you want to buy a house, maybe you have children, and all these things you have to, households board finance purchases, firms board pay workers and upgrade their capital, governments borrow to build roads, schools, bridges, to purchase goods and services, and to make payments. So everyone's borrowing and some people are saving, and this is how the system works, right? To make it as efficient as possible. And what's interesting about this is when functioning properly, The financial system helps enhance economic activity. And the financial system includes intermediaries and financial markets. And together, they facilitate the flow of funds. The intermediaries include banks. Is that clear? So these are the banking systems. So say you want to get a mortgage, you go to a bank, you want to buy a house, you go to a bank, say, look, I don't have my $800,000 to give them right now. Can you lend me the $8,000? And then you negotiate a mortgage, depending on, they look at your history, they look at how much income you're making, they predict how much income you're going to make in the future, and there you go. So then you decide that. And then you can also borrow to buy a car, you can borrow. So these are the things that you do, and that's normal. That smooths your consumption across time. If you were unable to borrow, right, then it makes it extremely difficult. Financial markets, on the other side, are way of borrowing on the side of businesses, if you will. So if I'm a business and I say, well, I need money, I have several ways of getting money. I can go to a bank and borrow, right? So I develop a business plan and I go to the bank. Or I could actually go public. And going public means that I'm going to give somebody a share of my company. And by doing that is that they buy, this is also called an initial public offering, they buy, so ownership in your company, partial ownership in your company. And then the people who buy it are called your shareholders, all right? Or you can have a partner, right? That's a different system where a partner puts in money and then becomes an owner of your organization. So there's different ways of doing it. Also, companies could also have bonds, a bond, and give out bonds. A bond is basically an IOU. So a bond is saying, please lend me this money, and then I will, and then after a year or whatever period of time, I'll give you more. So give me $1,000 and I'll give you $1,100, right? And so that's after a year. So that's one way of doing it. And these shares and bonds are then sold on the market as well. So we'll talk a bit about that right now. So the financial markets. You have, so financial system consists of financial markets and financial intermediaries. The first one is the market itself, a place or a channel where you buy and sell bonds and other financial securities. So that example would be the Toronto Stock Exchange, the New York Stock Exchange, where Wall Street is, that's where you buy and sell bonds. Remember, when you're in those markets, the company is not getting any money from it, okay? You're selling already something that's there. The company itself, the companies on these stock exchanges have already done an initial public offering. So they already got the money. But the shares themselves selling, and if the share price goes up, it increases the value of the company. So price of the share times the quantity, right? So these are the things that are there, and the bonds. And then the financial intermediaries are an institution such as a commercial bank that borrows funds from savers and lends to borrowers. And those are things that you see there. And finally, financial securities are tradable financial assets, meaning they are bought and sold in the financial markets. And an asset is anything of value owned by a person or firm. So for example, land is an asset. Some people buy land, they buy property, right? They buy apartments, and then that's a financial asset. And then they could sell it when it's increased in value, but they can hold it also when it appreciates in value. So those are the things that people have. It's not only stocks, it's not only bonds, it could be land, it could be property, it could be different types of capital. So for example, Bill Gates, part of his portfolio is $2 billion worth of farmland. And that's something, and because someone told him, land, we're not building anymore, so it's not growing. And so that's one of the things that they're saying, all right? You're saying that bonds can only be bought through public platform. No, not only. So they can be sold differently. Bonds can also, you can have private bonds, but usually banks go through it. And the public platform is basically one way of going about doing it. So there's government bonds. They're doing less of that now, but that's what's happening. Okay. Yes, Queen's Park owned part of U of T. That's correct. And Government of Ontario. That's one way of owning land. So corporations, let me give you an example. All right. So corporations like Rogers issue shares of stock, all right, which represents a partial ownership of the firm. And then the stock is a financial security that represents a legal claim in the profits and assets of the firm. So I become part owner when I buy that share. Okay. And then Rogers also issues bonds. And for the purpose of borrowing money that they promise to repay at a future date. Cities issue bonds as well. That's how they get some money. And then bond market is very important, right? In fact, a lot of people who are risk averse use the bond market. And then many years ago, the return on some of these bonds was close to 6%. Now it's not that. So people are looking for other assets to see if they can get a higher return, all right? And the bond market in the past was 2 times the size of the equity market in value. A bond is a financial security issued by a corporation or a government that represents a promise to repay a fixed amount of funds. And so that's something that there, and borrowing using bonds is done directly with lenders. So in contrast to borrowing from a financial institution like a commercial bank. So when you issue a bond, so Rogers issue a bond, it goes directly to it's the Rogers with the lenders or whoever they are. And each of these types of financial assets are then often sold in secondary markets, and that's what's going on now. So the bond market and the TSX are called secondary markets where you buy and sell stocks. But those are already, an IPO is different. Like I said, initial public offering, that's when the company gets the money, right? They initially sell some shares of their company, they release shares, then they get the money. Then afterwards, once it's on this secondary markets, you and I are selling our own shares. So I'm going to become less of an owner of a company, or I'm going to sell it. I'm not going to no longer be an owner, and someone else is going to buy it. Okay. So financial instruments are based on 4 simple needs. One is to raise capital. You want to do this, and something about raising capital. Let me just do this here. We raise capital without borrowing by selling shares of our business to the public. So that's one way. So if I'm a business and I don't want to borrow from a bank, one way is saying, let's see if other people are interested in becoming owners of my business. So we trade an ownership stake, a claim on future profits in exchange for cash. And this is called an initial public offering, as I mentioned earlier. Another way to raise capital is for companies or governments to borrow directly from the public by issuing bonds. And this is basically an IOU. So that's raising capital, important. The next part is storing, protecting, and making profitable use of excess capital. So in this case here, you're actually saying, I have this money. I want to maintain its value. Now, I can either put it underneath my bed. So suppose I have $200,000. Oh my God, yay, I won $200,000 in the lottery. So I can do one, I can put it underneath my bed. Is that a good idea? What will happen across time if I keep it there? What's going to happen? No. Come on, Roderick. Let's go.
Nada. Nothing's Nada. No interest.
No interest on it, or profit. And in fact, it could be that you're going to lose money, right? Because there's no interest. And if there's inflation, it's just going to eat up on the value of it. So that's an issue. So this idea of storing, protecting, and making profitable use of excess capital is when you have this money, where do I invest? Now, you could be risk averse, in which case you could buy a treasury bond or something like that and get small interest rate on it. That's fine. You could be then a bit more riskier, and you could say, well, let me do an analysis and let's see what kind of company I want to invest in. Okay. Then you have to make a choice. What's going on? What is the company doing? Do I think that company is going to make future profits? So I ask all these questions, and though you could be a long-term investor, or of course you could be a speculator, but we'll get there in a minute. The next thing is, so that's part of it's important. The next issue here that you want to look at is insurance against risk. Sometimes what you say is that, okay, you know, this someone mentioned putting all your eggs in one basket. Charmaine mentioned it insofar as education is concerned. The same thing is with money, right? Where do I want? Do I put it all in Canadian stocks? Or maybe do I consider also the US, where the market is growing substantially? What about in other places around the world? So when I'm looking at this idea of insuring against risk, whether it's a risk for you or whether it's a risk for a business or insurance in general, this is a good way of looking at it. So insurance against risk, so if I'm investing in the market, I may say I'm going to have what you call an exchange traded fund, which follows a market in another country or an industry. And I'm going to use that to sort of make sure that whatever I'm investing in, I'm not only in one thing. So I could have an exchange traded fund on the S&P 500. So that's the US market. I can have an exchange traded fund on the TSX, which replicates the Canadian market. So what I'm doing, instead of investing in individual companies, I may actually invest in follow the market in general. So that, you know, if I'm risk averse, that would be an interesting way of doing it. And believe it or not, this robo trading that's going on with actually no person who's advising you is using that, is using ETFs. Because of course, the fees on exchange traded funds are very low. So you get whatever earnings you get from that, it goes directly to the investor. So just keep in mind that there's a lot of stuff about insuring risk to diversify your portfolio so that when one market goes down, it doesn't mean the whole portfolio goes down. So you have things like bonds, you have things like, so that idea of diversifying risk is very important. The next thing is speculation. Okay, I know y'all love it. You know, someone tells us, hey, psst, this company, if you put money in, you'll get 1,000% return. Very rare. Okay, so just realize that if you're looking at this insofar as the need for the speculation, just, you know, the short-term thing, usually it goes slow and easy in investment, right? And you'll find out, you know, you find somebody, you know, an older person, all of a sudden they didn't know, but they're a millionaire. Why are they a millionaire? Because they invested a long time ago when they were younger, and they kept it in and they kept reinvesting and they used their savings. And they just, it's across time. It's like interest rate, it compounds. Compounding is fundamental. Starting early is fundamental, even with a small amount of savings. It's unbelievable what happens across time. It's when you wait last minute that it's harder to do, okay? So speculation is something that people do. And in the book, they talk about the link between speculation, and you have to sort of, I know like this, taking a risk sometimes, but you know, just make sure you chunk out that's something that you can afford to lose, just in case. All right. And then the next thing I want to say is that when you buy any stock, look into also whether or not it pays a dividend. So let me, cryptocurrency, I'll get there, cryptocurrency in a minute, because I did a whole class on that in my class. So if you take a look at buying a stock, there are also stocks that actually pay dividends. What is a dividend? So I'm an owner, I'm a shareholder, and sometimes when a company makes profits, it shares some of those profits with the shareholders, and that's called a dividend payment. And usually, I'll give you an example. So suppose I own shares of Bank of Montreal, of BMO, all right? And what they say is they give, for each share, they'll pay you a certain amount of money, say $100, well, not $100, say $1 for each share or whatever it is. So I have 100 shares. So at the end of the year, they'll pay me $100, but they usually pay me every quarter. So at each quarter, they pay me sort of $25 for those 100 shares that I have. So that is a dividend payment that they give me, but that's your money. And also from tax purposes, they actually, that has preferential treatment. So they don't tax the whole amount, which makes it interesting. So a lot of people who think about this also have parts, especially in Canada, they have some part of their portfolio that pay dividends. So that's why you see financials are one of the highest in paying dividends, followed by real estate, which is real estate investment trusts pay dividends as well. Now, technology rarely pay dividends. Is that clear? And that's because it's a really turbulent industry and they usually reinvest, and there's so much more of the money. So what you look at in those firms, what you see is the value of the stock goes up more. But in dividend paying stocks, they usually mature industries, and that's why you get dividend payment to attract you to go in there. And then of course there's consumer that has something, communication services less. So I'm just giving you some data insofar if you want to know, if you want to have invest in a stock that also pays dividends. It may not increase very much in value, but you get this regular income coming in, depending on how many. So can you please also clarify the values of ETFs? It's called exchange traded fund. And what these exchange traded funds are they're created by these financial intermediaries, and their objective is to follow the price of that another fund, another index. So it's like an index, if you will. It follows the price of it. So if I want to have, I'm interested in the U.S. market, but I don't want to go into the U.S. market itself. Well, I can get an exchange traded fund that follows the stock market, the S&P 500 or the NASDAQ or another market, and it gives me sort of the valuation of that in this fund. So it just follows it. So if its value goes up, the ETF, the value of that ETF goes up. And then I could buy it low, I can sell it high, then I make a return on that. All right. Is that clear, Carol? Did I explain that to you? Can you please elaborate on the difference between an IPO and stocks? Okay, an IPO is when you initially put out the stock. Okay, initial public offering is I'm a company and I'm going to go public, or I'm going to put out shares because I need money. An IPO is when then it goes out to the intermediaries who buy it. And then afterwards, the stocks themselves afterwards are sold in the market. So sometimes you hear when they ring the bell and there's a new company issuing new stock, that's when the company gets the money. When you're buying and selling stocks, you yourself on the market, that's the company's already done the IPO, the initial public offering. Is that okay? All right. So
we as individuals are not able to participate in the IPO, only large businesses with lots of money?
Correct. Usually it's the large ones that buy it, right? So the investment banks go in there and they take it, and then afterwards. So sometimes we try to get in there because maybe TD may have it, or whatever, whatever trading organization you use. They try to offer it, but usually it's the big ones that go in first.
Thank you.
Yeah. So sometimes I find out where the IPOs are happening. Usually at the beginning it's so high because there's so much, froth going on. The best, the big, I call it the testosterone effect at the beginning of it. And then afterwards, wait for about a week and all of a sudden the stock price starts coming down. So I'm okay waiting. Let people get excited, and then I wait when the emotion's out and then do the analysis of the company. Because I really look into what the company is doing. I just don't guess. So I'm not big of it in speculation. I'm better at sort of looking at it, taking it slowly back up and seeing what happens. All right. So I did quickly on markets just to give you a feel for it, because I'm not going to do the whole thing. But I'm going to now talk about the power of special interests. And Maya Angelou said, if you don't like something, change it. If you can't change it, change your attitude. And I kind of like that because it says, I even say, I'm not going to be unhappy with everything I can't change, because I'd be miserable. I'd be taking some antidepressants all the time. So instead, I just say, what can I do? Where are the things I can go? What are the things I can do? And then it gives us a little bit more hope. And so the power of special interest, I want to share some of the research I've been doing on this. And then this has to do with, in a digital world, how are we communicating some of the information that we're doing? And how has stakeholder influence? And we are stakeholders. We're trying to convince people there's an issue here I want to resolve. How can we resolve this? And how can we change behavior of firms and governments in a digital age? And the common expectation is now, because we're in a digital age and all this information, we should have a lot of influence, right? We should be able to change the world because we sent something out. So this is my Twitter graph, okay? So at 12 a.m., oh my God, have you heard about this thing? All of a sudden, oh, I am outraged. And then I am more outraged than anyone. And then, oh my God, someone just tweeted a joke about that offensive, and I'm outraged, and then more outrage. And then somebody should resign, not sure who, because by the time this goes on, nobody knows even what the issue is anymore, arguing about the total stranger. Now you're arguing with a total stranger about the issue. And it transpires that the story is a lot more complex. Oh, all of a sudden it goes down, ooh, X factor is on. What that means is the information that you're getting, it's just overwhelming. Think about this on the company side, right? Someone says some bad thing about your company. How are you going to react? There's this thing. Now, a lot of companies say, well, I'm going to let it blow over because I know this happens, right? And so then the question becomes, how do we deal with it? What is the thing? How can we get across to people in getting this information? So what I try to do in our research is that there's this cognitive process that takes place, okay, involved in stakeholder altering firm government behavior. So first we get all this information disclosure, okay? And when you get this information, there's this filtering process that takes place. So stakeholders first need to a reason to act and to do and to do something. And they do that when interests and their identity is challenged. And when their identity and their interests are challenged, they'll say, I need to do something, right? This is not right. And they must notice and make sense of the issues as well before deciding to act on them. They must discern them. So they also filter out many issues before they can act upon because they don't notice them or they misinterpret them. But this information overload is a really big issue when you get this. Remember on the internet, and even there's more bots. They say there's actually more bots than there are human beings in there. Because what they do is they reinforce whatever they're trying to do. So keep in mind that that's happening as well. And so, but when information overload, one's field of vision narrows, and also you use heuristics to simplify things. Remember I talked about asymmetric information, right? When there's so much coming in, then you start narrowing and then you try to find information that confirms your beliefs. And so you are really, you want safety in something you already know, and you seek information that confirms prior beliefs. So that filtering thing happens, right? Because naturally we're trying to make sense of all the information coming at us. But then there's something called sense making and sense giving that alters this filtering process. So we have to understand that both Google and Facebook, they have algorithms that are actually influencing and engaging us and keeping us in our bubbles. Have you ever done this? You went somewhere and you bought something, right? And all of a sudden, all the ads are always on the things you were looking for. Did that creep you out? It did creep me out. I mean, and somebody said they went to their mother's house and all of a sudden their ads had to do with the toothpaste that was in their mother's house. How did that? But it's just that they're collecting a bit of information, right? And they're sort of putting things together. And so what's interesting about this is that these algorithms also create these bubbles. And also firms have an easier time engaging in sense giving and to provide a counter narrative. So if I know this as a company, if I know this is happening, how do I provide a counter narrative to actually try to explain what's going on? So these efforts, so they're countering. So you have sense giving, companies giving or other people giving, trying to help you, and you're trying to make sense of it, but there's others also trying to make you look at their point of view, all right? And eventually you react. You say, well, I'm going to decide what to do. And then what's interesting about insofar as deciding what to do, you start framing it. You want to create change. How do we create change? So you must frame the issue in a way that will attract supporters, okay? It can be harder to break one established sort of frame in the digital age. Why? Because of all the information, sometimes also it's really cheap to provide more information. The bots can create a problem because if more people are saying, I like it, I like it, I like it, you don't know if it's actually people liking it or the same person or this bot going 1,000 times on likes. So this thing about information, and from an economic point of view, is that you want real information, and that's creating an issue. So it becomes harder to it because it's now so cheap to just sit down. It's called slacktivism, where you just push a button and say like, but you're really not engaged in it. You're needing, and that's what was really interesting about the Black Lives Movement is people were engaged. They saw that. They not only said they like it, they went and protested. They went out there and visualized. They said this is, so clearly this engaging, this synchronicity, they got synchronicity, right? Insofar as things came together, the moons aligned, that people decided. So that's this ability to synchronize, so people to see things is happening, right? So the idea of slacktivism, the likes are not enough. You need synchronicity. You need to frame it, and you need people to say, yes, this is important. This why, and then it's consistent not only from your group but from other groups coming in saying, we need change. We need this to change. We need different people coming in saying, we all want this to change. This is wrong, right? So these are the things that are going on. Now for a company, when you get all this information, how do you deal with a competitor giving you a bad review, right? And these are things that companies now are dealing with right now. A lot of them reply right away. So you see this a lot where, for example, you're unhappy with an airline. So you tweet out something, and all of a sudden you get a message from the company. So you say at Air Canada, all of a sudden Air Canada is going to say, can you DM me, direct message me, because I can tell. And it's them realizing that, that social media does have an impact, but they want to make sure that you're doing it. So just keep that in mind, that social media has created a new world. And that insofar as influencing, you have to think about framing, you have to think about how other people are looking at this, and keep in mind that it's not an easy thing to do. Yeah. Can you believe it? I want it short because I want questions from you. That's why I wanted to do it. Tika, did I do a good job?
You did. Thank you very much. So we have about 15, 20 minutes of questions. Folks can raise their virtual hands or post questions.
Okay, I'm going to stop share here.
So to achieve that synchronicity,
yes,
and I guess distinguish something that worthy of contributing to, how is that done versus, I guess, just the bots that are liking?
Yes. Well, the synchronicity, it's almost as if you have to get different audiences, right? So the synchronicity is not only with your group, but other groups saying, let's work together. A good Black Lives Matter with the Indigenous, right? They got this, that we are experiencing the same experiences. What's going on in Palestine as well. So these people are saying, there's some commonality here. Can we look at the voices and seeing what it is? So the synchronicity is happening. People are sort of starting putting things together. And we do this a lot in universities, right? And so far as teaching people how to connect dots, what is going on. And there are a lot of things out there from the synchronicity as far as information and understanding where things are going. And there is a counter narrative all the time there. Always. There's always people trying to protect their interests. And you have to say, well, how can we sort of keep that in mind, see it when it's there? Some people, what they do is they block, right? So that voice doesn't come into your feed. And those are the things that they have. But the synchronicity is bringing that. It's harder to do. It's not easy now because there's so much. Remember at the top, when they're sense-making, sense-giving, they're trying to do that. The algorithms that are there as well. I mean, you have to understand that we're using a system that's also created by people. And then there's also biases in that.
Right. Michael had a question?
Yes.
Yeah, a question and a couple of comments. I just want to remind folks in the chat that the BBPA do offer individuals the opportunity to come and make presentations. And I know Charmaine has been very vocal over the last little while. And so we do afford her an opportunity. Just send us an email saying next week or the week after you'd like to make a 10 minutes presentation or a 15 minutes presentation on something, and we'll allow you that opportunity. The second thing I want to mention, though, is I like this concept of the slacktivism and the synchronization, because as I look, and again, my PEEF project is looking at the turnout, looking at those who are making themselves available for this awesome lectures that you're doing each week. And it keeps taking me back to that 10% that we talk about in the Black community. And to me, it seems to be working itself out here again. We have done all the marketing we can do, but it seems like we're just attracting that core of folks who know that we have to go beyond high school. It can't just be at the high school level and then we try to go in business. But again, I'm seeing it here, and I'm just saying it's not enough to like what we do. We have to start to do what we like.
Well, I think that's where that program that Roderick and Schulich's doing with the BBAs that created that, saying what is the value? So that's trying to do it. It's not only to advertise about Schulich, but just in general about programs. and how this can engage. You meet different people as well. You get out of your one's bubble and meet and engage with different people. It's amazing what you learn in a university environment. That's what we lost also online a bit. Students really want to come first face to face. They miss that. They want to see their colleagues. They want to shake hands. They want to give people hugs. So these are the things that they're realizing. And Michael, you're absolutely right that, but engaging, everyone is so much information. Saturday morning at 10 for young people, that's hard.
My final comment though is you did mention you could do a whole session on cryptocurrency.
Yes.
And I think we will have to call you back just to do that one special session for us.
I did a session for my class just on cryptocurrency.
On cryptocurrency. I know we only had you for 4 weeks and so on, and then we'll give you an opportunity to kind of relax, but we will have to bring you back on cryptocurrency because we in the Black community believe seriously that that's one of the way that we can probably go to create wealth and make some differences. And it's very controversial right now. We have got our own expert here who has given us some lectures a couple of times. But what shocked me the other day, I think 2 or 3 days ago, I read where it was tanking and there's like 2 billion disappear on the.
It's speculative. Remember I told you that the fourth one speculation? It is, but those who came in early, right? They bought.
We're going to ask you to come back and have a robust discussion with our experts on cryptocurrency.
Yeah, it's not money. That is not. Anyway,
those are my comments, Steve.
Thank you. So there's a question in the chat from Denise H. Can synchronicity take away from the message of a particular brand or movement? And might be some ways to maintain uniqueness? Thank you again, Michael.
That's a great question. You know what we did in that paper is that we compared before digital age and after the digital age, right? And what we said is during the digital age, it's cheaper, right? The costs of doing this, of getting involved, is gone down to 0. I could send it, it's gone down to 0. But as a result, everyone's liking different things. There's no sort of way of putting things together. So what we want to do is the synchronicity means in getting the message and getting people thinking about this thing. Yes. So if in the company, they say, well, is everyone agreed that there's something that's really working well? And developing synchronicity with your customers as well, if you're talking about it on the business side. Do they all agree that maybe our customer service is very good? Do they all agree that there's issues? Are they voting with their feet? It's that idea that's a two-way communication now, right? And so what companies have to realize is that if you do go on Twitter and you have whatever your company name is, it's also you communicating with them and them communicating with you. You've opened a two-way channel, and that can be hard. That can be very difficult because you can get good news and bad news. And so you have to be able to take the good and the bad, and then how do you respond to it? And I've said, no, some people have had bad experiences and they looked it up and then they say, DM me, we'll look at it. So the synchronicity has to do also with knowing who your audience is, right? So you have to synchronize with the people that you think are important. Not everyone in the world is going to be looking at that. But if you look at this, you have to think about it, but it's harder to do. It's just harder to do.
Now we have 2 questions in the chat. We'll take Rochelle and then Charmaine. Just a reminder, if you could please be succinct in your questions and comments. So Rochelle and then Charmaine.
Hello, good morning.
Good morning.
Good morning. Thank you very much for the presentation, and thank you very much, BBPA, especially Michael just mentioning on the fact of just education goes beyond the college and the university level. Just being able to speak out and expose yourself to those things that you are interested in. So I really appreciate this panel and just the opportunity to come and take in the knowledge that I didn't go to school to study for, but I'm very interested in. So one of my questions is in regards to bonds. It's just one of those things that you don't hear much of. You hear about the stocks, you hear about all these things. So I just wanted you to just elaborate a little bit more on it. And given the fact that I guess there's less and less of it now these days, and the government is pretty much kind of, I guess, phasing it out. I do have one that was, I did have one that was gifted to my son when he was a baby. So I just wanted to know, to have a little bit more idea of what it is, how you can use it, and things like that. Thank you.
Okay.
Thanks,
the Canadian government now is, you remember, because the interest rates are so low, bonds have not been as attractive. So they've come out of sort of, they're not issuing as much, and they're basically going to big companies or organizations to get some of the money they need. And the central bank is doing their buying bonds from the government. They don't need us to buy their bonds in order to get the money. So let me just, there are municipal bonds as well. Cities give out bonds. The city of Toronto does this. So if you look at any sort of annual reports, insofar as exchange from bank or TD or whatever, and they have a bond fund, right? In there, you'll see a list of all this. So sometimes when you get into these RESPs, registered education funds, some of them are risk averse and they have bonds in them. Now, whether you want to get a bond, there is a bond market, but it's also costly to get in there because there's something going. But you can go through your trading account and buy bonds as well directly. But there's a market there, and then it's sort of inversely related to the interest rates, so it's a bit more complex. But buying a bond is one way of doing, and there's a huge market. But these are with big players going on. So for smaller players, like investors like you and I, we buy a bond fund, right? A bond exchange traded fund, which follows the bond market. Now the price right now is fairly low, but across time, as interest rates start going up, then the bonds as well may go up as well, depending on the situation. So what I would suggest, for someone starting out, is actually get an exchange traded fund with bonds and putting in that in your portfolio. Another example is a GIC, like, a guaranteed investment fund, whatever, GIC. And so that you can also use as well to get some interest on it. And these pay interest. Now, from a tax purpose, interest is taxed higher than dividends. So that's one of the things that people look into as well. But you can sell your bonds as well, and your government bond, and just get the money and then maybe put it somewhere else.
All right. So we have another question from Charmaine and then Dwayne.
Hi, thank you, Mr. Brereton. So one question that I had, Professor Enriques, was if you can provide sort of like, I would really appreciate a lecture basically on a step-by-step process in terms of investing, because I think there's a varying degree of comfort level when it comes to that, and a varying degree of education around investing. And I think that would be really helpful for youth to sort of have that information. So that would be one thing to connect with the BPA about. But for now, I guess, if you were to give a few pointers for someone who is risk adverse versus someone who is risk accepting, what would you say would be the best way for a young individual having either of those qualities to start off when it comes to investing?
Usually when someone makes a recommendation, they have to be certified. So you have to be very careful insofar as that's concerned. Now there are, all sorts of, if you go to the TD or any of your banks, they have like websites and people who are professional. Be careful if they're just trying in general about investing. There's tons of stuff on the internet from these banking institutions about investing and how to invest. For someone who's risk averse, sometimes, my late father was very risk averse. He'd never, the stock market, he'd never put a penny in there. And if he'd known now what I do, he'd be just, he'd just twist in his grave. But the reality is that, it's different strokes for different folks. And some of them people have just put in GICs, and they're supposed to they put it in the bank, and it's a little bit of interest, and that's how they did it. Some actually bought government bonds, Canada savings bonds and things like that. That's risk averse. You're guaranteed that income. So it's AAA, it's guaranteed, not a problem. Others, what they do is they put in monetary funds, right? They put it in sort of very simple money funds, and that's fine, and that's good too. And so treasury bills as well. And so these are things that they put in. In stocks, some of them put in, there's some variability, but they put it in dividend paying stocks, They don't move too much, but they're consistent across time. Now, history does not necessarily predict what's going to happen in the future, right?
Yeah, I'll note that the 2 cohorts of our community space program was dedicated to investing. So I want to misquote, but I think those videos are posted on the BBPA's YouTube page or will be posted shortly. So just note that the 13 weeks or maybe the 26 weeks prior to this session were dedicated to in investing and saving. And we have a few folks here who were part of those sessions. We ran an investment group. You'd have heard Michael talk about UJAMA last week or the week before, where we had communities within our space here learning to invest on the stock market.
Absolutely.
So please check out those videos that are posted on the BBPA YouTube page. And I don't want to, again, misquote, but I think we will come back to investing and saving for youth in upcoming cohorts. So.
And just to mention, Tika, those investments are still live. The groups have still got the funds on the stock exchange doing what it's supposed to do. And as you see, just over time. So when we pivot back to it, they will give us a report as to what is the status, et cetera, et cetera.
That's excellent. That's excellent. And that's the experience, right? It's just, we do that sometimes, a play money, right? And they play around and they see what happens. And that's what we need to do is experiment. But it's also long-term. What sometimes happens is these classes are only for 1 semester, but the investment decision itself usually is long-term. What happens from year 1 to year 5? And the patience, it's the patience, because what happens is sometimes the market price goes down, like, oh my God, I'm losing money. So what, right? It's just on paper, wait, maybe it was a bad news, things can get better. It's that learning how to deal with the markets going up and down. That's what that people have to learn with. And that's diversification that allows you to sort of accept that if you can.
Yeah, there's a lot of psychology, obviously, that goes into investing. And I think, obviously, from the BBPA's perspective, that's one of the things that we intentionally have set out.
For you. Yeah.
And what about to those people who are risk accepting?
So, sorry, Dwayne has been waiting. So can we come back to that question of risk accepting, just so Dwayne can get in as well? So we will come back to that, Charmaine, but Dwayne, please go ahead.
Thank you for that, Tika. First off, Irene, just wanted to just thank you for a great presentation on the information. It's very informative, and the whole BBPA staff for providing this presentation. Again, very informative. My question is in terms of, I guess, different investment vehicles that are available. The stocks, we talked about cryptocurrency. I actually put it in the comments there, but if you type these things in to Google, you're gonna literally find like millions and millions of different hits on where to invest your money into stocks and cryptocurrency. So do you have a strategy? Do you have like certain, I guess, mediums that you frequent in terms of gaining your information on where to invest your money? What makes the most sense financially?
Or if I may even add to that question, how do you figure out what is the clutter and what is the solid information?
Okay.
That's right.
Yeah, I know. It's overwhelming. So when I was doing research on crypto, I actually went in there and I just said, wow. I went to actually research papers. I went to people who are actually not selling crypto. Crypto used to be, it was dark money, right? It was used from people who were laundering money and was on the dark web for a long time. And so I give the story about where it originated and why now people are considering it important, and also the environmental cost of it, because it used a lot of energy. So it's the blockchain is what's important. So if I'm going to invest in something, it's maybe not the crypto part, maybe the blockchain part. All right. So that's the things that for me in my mind is what's behind it. And so the idea is, remember, one of the reasons why crypto went up so much is everyone's at home. Right? Everyone's at home and they're getting, think, oh, I need to make a quick buck. I mean, so these things, people are learning about it on their own, and young people are excited because it uses technology and things like that. So the question then becomes, what's behind all this? What is sound, what isn't, and then look at the information about where the base is, where it's being traded, and things like that. So, and then what's a wallet and things like that can be lost. How can you do? Now, also what I look at is, what are the central banks doing? Very interesting.
Mm-hmm. Very good point.
Canada. What's the Federal Reserve doing? Remember, this is about, is it ever going to become money? Right? So I sit back and go, right? Is this going to be, it's maybe here to stay? I don't know. I mean, you have Ethereum, you have, whatever play money you talk about. There's many different cryptocurrencies. So some people are trading in a basket of cryptocurrencies. So we're going to have to think about that. So if I were to give a class, I would say first, what is the base? What are the central banks doing? What are they talking about? And what's going on there? So there's different players, and I would want to know where they are before I go and invest a lot of money in.
Basically what the experts are doing and what the...
Absolutely, what they're saying, right?
Right. I recently just, started out in this space myself in terms of investing in stocks and cryptocurrency.
Mm-hmm.
And I have a lot of friends that have been investing for years. So I have a little bit of guidance that way.
Excellent.
But I'm also looking at what you pointed out, Irene, in terms of looking at, okay, what are others doing? Maybe people that have a high net worth. I look at a lot of athletes actually and see what they're putting their money into, because they have like hundreds of millions of dollars, and these guys,
but they can afford to lose some of it, right? So that's the point. You have to think about, they can afford to lose it, but what can you do, right? And so I always say, be careful. Insofar as you have to say, what can I afford? When I put something in, sort of riskier, I say, okay, if it goes down to zero, am I okay with that?
Right. Well, I basically work off of a 5% rule.
Good
whatever my earnings are, I'll put 5% into that. Okay. Into different vehicles. But there was also one cryptocurrency, Elon Musk, that was creating a lot of
Bitcoin.
Yeah, a lot of I guess news and press, and
that's what happens with Twitter. Remember Twitter, right?
Mm-hmm, mm-hmm.
That's exactly what he did. He tweeted out something, because before you can use Bitcoin to buy a Tesla. Then he said, no, I'm not going to use it. Boom, right? Remember, that he added legitimacy to the value of Bitcoin by saying, I'm going to use it in my business.
Mm-hmm.
Right?
He swayed the market a lot, but he lost billions just recently. So I'm kind of at a loss,
So see.
Yes, well, I'll say, Dwayne, if you get a chance, please go and visit the BBPA's YouTube page. I think we had 3 sessions or 2 sessions on cryptocurrency. And I see your hand, Terrence, but we'll get to you in a second. So please visit our previous sessions on investing and saving, because we did go through quite a bit of content there about some of the questions you're asking here, and we'll certainly come back to it.
Perfect.
In future.
Thank you for taking my questions.
Thank you.
No problem. Thank you for the question.
If you can be ever so brief in your question.
Terrence?
Comment, Terrence?
Hello, thank you, Irene. It was a great session. Sorry, I don't want to be long because I tend to be. In terms of crypto, I spent a lot of time in it. I've done a lot of research in it. And again, it's the same thing as everyone's saying, do your research, learn as much as you can, speak to others, get different perspective. And I appreciate, Irene, you putting to it. I've learned a lot. And if for crypto investing and all the investing, everything we say here at the BBPA, like I've learned, I put it into crypto, just as you say, if you hold 5% or 10% back of your income, as Irene, if you invest what you're not willing to, you're not going to worry about, it's not going to keep you up at night. And the more you learn, realistically, is more you earn. One of the things I would say is athletes have never been historically really good with their money, right? So follow the real money. And then once you find out who the real money is and find out what they're investing and how they're investing, and then get into a group like this, right? Everything that these guys say, you know, tell your friend to tell a friend, because when you're investing into something and you're learning, you know, you double your time by doubling the people that are working on a different project. And that's how you can make, you know, your 24 hours even more than 24 hours. So when we touch on crypto, when we touch on other investments, I consider myself a crypto expert, but I get experts in different fields like stocks. I get experts in real estate to show me. And then once we come together as a whole, that's when we make the magic happen.
So
right?
The reality is I try to, if somebody's selling something,
yes.
right? I don't know, I put a filter on it, right? They're filming. So someone's talking about crypto and they're in the crypto business.
Yes.
I put a filter.
Sure.
And just like, you know, I'm sure when I was talking about universities and are their business, I mean, you probably put a filter on me, right? Because I want more people to come. I want more people coming into my class, but anyway, but the reality is what is it, right? So it's an offer. So I always put a little bit of filter because I know there's self-interest always in anybody who says anything. So I go more to
that car dealership and ask him, tell me about your car. Why is your car the best, right?
Yes,
and then he said,
yes.
well, this car is the best car.
Yes. Oh my God. Yes.
It's ideal.
Thank
I guess for everything else, you just get your information and study. Sorry.
Absolutely. Yeah.
Thank you, Terrence. And I believe someone is asking for your contact info in the chat if you don't mind sharing.
I will do that.
Usually has a homework question, but may I ask one question before you get into it, Roderick?
Sure.
Because I don't want to miss the bit about organized interests. And I'm curious about your thoughts on how organizations such as the BBPA actually impact the market and can impact the market.
Market, what market?
Economic markets, or how lobby groups generally
yes.
influence economic policy making and business decisions.
Okay, so in the question is who do you get involved in your organization, right? And the networking that happens. So there's a lot of networking that's needed. I would always try to get, just like boards of companies and their boards, the people they get on their boards, a lot of them are coming from government, right? They get people who were in government and then put them on their boards. Why would they get somebody who passed the MP, right? And a minister? Well, they put them for that connection to government. So if I say, look, they're going to put a new regulation in, how can we influence them in doing that? Well, then you have to talk to this guy. Well, I know so-and-so who can maybe give me more information. So it's that networking that's important, right? And who do you do it? And I think you've done that because I've looked at your BBP page and you have people who won awards, right? Who you've given awards to. Those are your network that if you say, well, we're concerned about this, how do we do that? So the Consumer Reports, for example, is a magazine, and they network about on behalf of consumers on issues. So people are concerned, they say, these are all the people behind me who are concerned about this. Can we talk about a legislator or whatever and then talk? So this takes time. It's a process that happens across time. But it's networking is key.
Right. And I think just in terms of some of the conversation that we had, we often hear when, for instance, athletes are going to be buying this or entertainers are going to be buying something, right? But we don't hear when they're going to be selling.
Yes.
That is a key factor, right? So I think what Terrence was saying, obviously what Michael was saying, and Dr. Enriquez was saying, we have to do our homework and make sure that we're not just following a trend, because
absolutely
in a trend, it is obviously some people can make obviously a lucrative living in terms of trading and whatnot, but you have to do your homework. It's not something that we're just here to gamble with, right? There's obviously the selling part is a huge part of that whole process too, because if something's going to drop and you've got that insight of how it's going to drop and how much it's going to drop, you may get out before that drops, right? So they're not sharing that information. So you've got to 100%.
It's called pump and dump.
All right.
That is why they make insider trading illegal.
Correct. But right? You do a lot of that in Canada, though, because we're so small. So, oops, I shouldn't say that. it's how do you find out, right? I mean,
Elon Musk is stating that initially he's gonna allow people to buy his vehicles with Bitcoin, but then he changes his mind. If you don't know that he's gonna change his mind, then you may see your investment drop.
Absolutely.
Right?
Look at my Twitter thing, see what happens. It's almost like a stock. I'm talking about it, it's going great, and then boom, the same thing can happen when it comes to a stock.
Right?
Yes. So sorry, I'm always reminding folks of the time. I do want to get back to one question. I think Charmaine had asked about tips for those who are okay with risk. If we could respond to that and then get ready to bid everyone goodbye.
Well, tips okay with risk again. Just look at what's happened in the past. I mean, there's all sorts of data you can get. Do your research, right? And in that case, you look at momentum indicators. Try to see where things are going up, right? And then go with the flow, right? Some people don't care what the stock is; they just want to know what's going up. And again, there's a lot of exchange funds that actually look at momentum only. But there's other ones that have collapsed as a result of momentum. They've lost everything. So just keep it in mind.
So before we leave for this week, the initial week when you came on, Professor Enrique,
yes.
You talked about asymmetrical. For those people who may be new in terms of just being able to mitigate some of the lack of education, what are some of those things that we could do just briefly to I guess, equal the playing field of that knowledge deficit that some communities may have?
Deep down inside, right, we always say, what do you want in your life, right? I think what we need to do is you have to want to do and to succeed, right? The ability to know, I know it's hard. And I've come from a background where, I was the only female PhD in my program, all guys. And then I got a job and they said, well, you only got it because you're a woman. I just almost tore my hair out, right? These things happen. People say things, but you can't control what they say. What you can't control is how you react. And so my view has always been, we need to do, and we need to say, we can do this. And we need to sort of say, there are naysayers, ignore them. They're not going to waste my brain here. I'm just going to continue on. And these are the things I think are really important, is that you have to sort of continue on, think about it, have the initiative. It comes out, it comes out in your face. When I see both of you on my screen here, I know that you're inspirational. People want to hire people, want to do things, do it that way. And then we have to move forward. Education is the way forward. Education in learning, in experience, and consistency learning. My dad didn't have an education. He was grade 3 or 4, my mother grade 2. But they learned. They were able to learn all the time. They learned how to read and write on their own. I'm not saying university is always the way to go, but right now, I had someone who applied for Walmart and they had a university education, right? And so you have to think about it. It's a signal. Education is a signal. Asymmetric information, I want to know. And so you have to understand that as from an information perspective, it's a signal. You need to signal. Thank you.
Absolutely. And on that note, we are definitely pursuing and encouraging higher education in terms of everything that you endeavor. Get the information, go above and beyond. It's going to take us going above and beyond. My parents used to say, you've got to be twice as smart as the next person to get forward, and just based on some of the realities of our race and how we're perceived. So, I think with that, we got to pursue further and just go get it, and don't stop. You're never too old to learn. And don't share it with don't keep it to yourself, share it with the community, reverberate that. So final words this afternoon, Mr. Michael Pennock.
Tell a friend to tell a friend to tell a friend.
All right. To join us here on Community Spaces, the financial literacy program that speaks the language of the community. Tika Pennock, final words for this.
For those who are in high school or with high school aged family members, the BBPA's National Scholarship Program is opening in a few weeks. So please visit their website, visit their YouTube page for recordings of previous sessions. And we look forward to our final week with Dr. Enriquez next week. So please tell a friend to come out and enjoy some good conversation. Thank you.
And we're going to talk about globalization next week.
All right. I saw
Monica.
Just for the final word, Monica.
Yes.
What final words? Oh, yes.
She was clapping.
I was clapping. I was saying yes. Another great session. And thank you again, Professor Enriquez. Such enlightening classes. Tell a friend to tell a friend. I've tried. One of my friends is here. So be like me, you know.
Absolutely. So next week, we want everybody to tell a friend to join us. So tell one or two of your friends. You know, we're always consistently getting our numbers higher. And let's raise your glasses for another great session with Dr. Enriquez. Yes. So stay safe, and we will see you on the BBPA's Community Space, the financial literacy program that speaks the language of the community. Tell a friend to tell a friend.
To tell a friend.